What is up everybody, and today I've been getting this question a lot, so let's talk about how we make money from a stock market crash. So diving in, we actually have to answer two basic questions, which is really obvious but most people don't actually know, which is, are we in a stock market crash? And how much money do you want to make? And at the end of this video, I'm going to tell you a strategy to make money in every stock market crash. So let's answer the question, are we in an actual crash? And the first thing you get signs of is just looking at mainstream media, what's happening in the news. And another big sign I know something is happening is because I myself also watch YouTube videos a lot. Like at least every day I watch a video of someone doing it, especially in the finance space. So I see it coming all the time because I want to be informed on what's happening with my investments and where I can make money in the market. So these are the first two places that I see when something is happening in the market. So having a quick Google on stock market crash, you can see here it's plastered all over mainstream media. Stock market crash, about the tariffs, stock market sell-off, what's happening in a crash, how much money we've lost. We'll say at 1 trillion wiped out. See, a lot of big money, that's in India. Then you keep scrolling down and then the YouTube videos start coming up. Down again, you got news coming from Investors Business Daily, the Economic Times, Business Standard. So yeah, a lot of information out there. So from all this, can we actually decide, are we in a stock market crash? Then you head over to YouTube, just having a look at like the last week, stock market loses 4 trillion. Graham Stephan, you know, a guy that I watch or started watching a lot of, stock market crashes. So it's all here. It's all telling you that, hey, something's happening in the background, but are we in a crash? So let's head over to Wikipedia and just have a look at what a stock market crash is. And we can see here from the first paragraph, a stock market crash is a sudden dramatic decline of stock prices across major cross-section of a stock market, resulting in a significant loss of paper wealth. Crashes are driven by panic selling and underlying economic factors. So yeah, we're having that with the tariffs, right, in America. They often follow speculation and economic bubbles, indeed. And here's an important point I've highlighted, but the term commonly applies to declines of over 10% in a stock market index. So let's have a look at the stock market index, and we'll be using the SPY chart. Looking at the trusty ticker symbol SPY, we can see that the 1-day chart, it's been down a bit. The 5-day chart, it's down by 3.56, which is, you know, a decent move for such a massive index. The 1 month is down by 7%, so that's pretty close to the 10% mark. Let's have a look at the year to date, because we're pretty much, what, 2.5 months in, or 3 months, sorry, 3 months in. So it's at 4.91%. Now, if we look at the highest point, what's that? 609, 612, and go down here. So that's pretty close to the 10% that we're looking at. That's 9.3% in the S&P 500 index. So yeah, we're near crash territory, right? So here is some secret that I'm going to spill with you. I have found a chart that actually tells you when a crash is happening, not just by having a look at the news, having a look at YouTube, having a look at the, you know, what people are telling you on the street. This is an actual chart that shows you when it's happening, and this is when you apply your money, the money that you have on the sideline. So this chart is called the VIX, and this is the volatility index, and it just measures the volatility that's happening in the markets. Now, why this is a good indicator is because remember how I showed that stock market crashes happens when there's panic selling, and this is where money is made. So if you have a look at here in the 1 month, you can see that the VIX has started to rise up because, you know, volatility is happening, panic is setting in, which is showing you that, hey, there is some action in the market and we are heading for, or could be in a crash already. If we go straight to year to date, we can see that right now is its highest peak, indicating there's definitely something going wrong. And look, it's up by almost 50% year to date. So going back to 6 months, we can see that, hey, something actually happened at the end of December, and I think this is probably when the president was elected, right? Around here, you had some sort of action, it came up, so that's pretty high. So here, we're getting that same amount. Now, if we go to 1 year, we can also see, hang on a minute, back in August, actually in 2024, something else was happening, so there was a lot of volatility there that tells us. And compared to this, it's not actually too bad, right? This is, you know, this is only at 26. This here is closer to what, under 40, okay? So do I think we're in a crash? Well, not really, because something else happened and I can't even remember what happened in August back then. So let's find an example of when something really happened to indicate a crash. So if we go back to 5 years, we can see something happened in the 20th of March 2020. And what happened then? At a whopping 65, there was a global pandemic. So now I ask you, are we in a crash? Well, if you compare it to right now, which everyone's making a big deal about, I don't think so. We're at 26 here, right now. Over here, pure panic, chaos. what was happening with a rating of 66. So this here shows you that we're pretty far away, okay, from a crash. So should you be deploying all your money? Probably not. And let's go back a little bit further. Let's have a look. So here we go. We're right here, 26 again. Don't want to keep stating the obvious. Then here, global pandemic. What happened over here? Here was the last big crash. Look, just under 80. It doesn't even give me a reading here. So that was the global financial crisis. So it's telling you that there's opportunities in the market roughly every decade, right? Look at this. They come up pretty high. There's 40. But right now, not really a crash, is it? So I hope you learned something from that. And it shows that we're not really in a big massive crash right now. Yes, there's a bit of pullback, but I think this is healthy. The market's been overvalued. That's the reason why I was selling as well. Now the next question brings us to how much money do you want to make now that the stocks have pulled back? But before we answer that question, I'm going to tell you the answer to this question here, which is why don't people make money when this happens? It looks so obvious on the charts, and that is stocks and assets go down when this happens, when there is a slight pullback, which means they're losing money. They're not making money, right? What you need is you need capital cash on the sideline. And this is the problem. Not many people have spare money sitting on the sideline just waiting to put in when something like this happens, because you've got bills, you've got to actually live, you've got to pay mortgage, you've got to pay rent. You just don't have spare cash. The average person does not have spare money in the sideline. The only people that can take advantage of this is normally people that are rich, have high income, and have, lots of spare money on the sideline because they've already got assets before that. So what do you need to do to make money when this happens for you? You need sideline cash. So looking here, if you had $1,000 invested right as everything bottomed out, and it comes back at 100% return, so you double your money, right? That's only going to be $2,000 because that's all the money you have. That's it, 100% return. Remember, the S&P 500 only gets 8 to 10% a year. So basically you're getting 10 years worth of gains here. And you can only maximize it because you've only got $1,000 on the sideline. This is the problem. This is why people can't make money from this. Well, the average person cannot make money from this. So this brings us back to the question, how much money do you want to make in a crash? Because it's directly proportional to how much money you have on the sideline to invest at these moments. So going back to my example, say you have $10,000, right? And you get at the very bottom, it gets 100% return. 10 years worth of gains, that's only going to be $20,000. It's a lot of money, but it's only going to be $20,000, right? You're putting a massive gamble here, but it's only $20,000. So then we move on to the big one, $100,000. You put it at the very bottom, you get 100%. That gives you $200,000. This is how you make money. This is the kind of capital you need. So again, how much money do you want to make? Well, you're going to need to have a lot of capital. So do you have the capital to make the money you want to make? So now you know the difference of a true crash and when a pullback is happening. How do you do it? How do you actually make the money? Well, there's actually only one safe way to do it. And there's another risky way, which I'll show you in a minute. But the safe way is to DCA into VT, okay? So what do I mean by that? Well, it's dollar cost average into a broad diversified total world fund till you're retired. That's it. Super simple strategy. It's all you got to do. Let me show you how it's done on Sharesies. So we're over at my Sharesies portfolio. You can see here it's had a bit of a slight pullback. We're actually pretty sure we're near 90,000, but now look at it, it's pulled back quite significantly. But anyway, back to the video. You hit explore, come up to here, and then you hit type in the ticker symbol, so VT. Should come up, and here it is here, Vanguard Total World Index Fund. Click on that, and what's pretty good is that I actually sold out of VT just recently because I've changed the way my portfolio is, but that's for another video, right? So in this video, it's pretty cool that you can see when the buys were, and that is because I was just buying VT, every week, every other day when I had money. This is the safe way. You don't know when the stock market is going to crash or do its thing, but if you periodically buy when it's happening, see this here, look, see this pullback? This pullback's down to what, $115, okay? Back here, there was a pullback here as well, back in September. I should be buying then if I knew there's a pullback here, but that means nothing because here was even lower at $113. Here, there was a big dip all the way to $108. So you don't know. All you do is put money in every week. But as you can see here, I'm not putting money into this anymore because I'm going a bit riskier with this, right? But this is the strategy. And if you do it over time, look what happens in 10 years. Doesn't matter the dips. It just goes up long term. That's what it does. It goes up long term. That's all you got to do. Just keep buying periodically with the money that you have on the sideline. So for the riskier people, how do you make more money? Well, there is a risky way, right? You go with growth stocks. Growth stocks like Tesla, Nvidia, buying high and selling low, waiting for these to come down and trying to time the bottom and then sell at the top. Very difficult, and I don't recommend it. I do it, but I don't recommend it for you because I'll lose money in it, right? The safe way is to do VT. So what does timing the market mean? Well, have a look at Tesla. If you go back, you can see that it's dropped year to date by 40%, right? If you go 1 year back, you can see it was low, it went high, and now it's low. So should you be buying? Yeah, I think it's a good time to buy. Am I buying personally? No, I'm not, because I don't think it's crashed completely yet. But I don't know, it could turn around, come back to $400, who knows? But it's down 51%. You know, this is what you're gambling with here. You're gambling that you're buying low, so then it comes back up to $400, and it come back to $400 many times before, right? Well, a couple times before, previously, what, 360. So buying at this level isn't actually bad, but this is the riskier one. Do you really want to be putting your money into this? Can you afford to lose that money? Those are the questions you've really got to be answering yourself. So just a summary of this video is understanding if you're actually in a crash, and also understanding that we need to have money on the sideline ready to invest for these situations, because this is a time when you want to put money in, and be smart about how much you want to put in at what time. Anyway, thank you very much for watching. If you have any questions, put them down below and I'll do my best to answer them. Feel free to use my referral codes to help me out. And if you're interested, you can head over to Instagram where I post stock market news, what I'm doing in my portfolio. So head over there and follow me if you want to hear from me midweek. Do us a favor, hit like and subscribe to help the channel out. The trading platform I use is Interactive Brokers, Hatch Invest, Stake and Sharesies for individual companies, and I use InvestNow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. And click this video here if you want to see me make $150 a week doing options trading on my other portfolio. Otherwise, thank you for watching and I'll see you on the next one. Goodbye.